From debt to lawsuits to depreciation, there are a lot of concepts around the real estate market where you live that chances are don't exist, or certainly don't exist in the same way overseas. In this video, I'm going to go through some common things that I hear about investing in real estate that you might want to put to the side if you're going to invest in the new markets we talk about. Hey guys, I'm Andrew Henderson, and if you want to learn more about Nomad Capitalist, what we do, and how we help the 7- and 8-figure entrepreneurs, including with our new real estate master classes, go to nomadcapitalist.com and you can learn more. Now, I want to talk about real estate in this video because I have seen over the years of working with people, whether they're buying real estate for a residence permit, buying real estate for citizenship, buying it for general diversification, currency diversification, just a place they want to live, whatever the case may be, I've heard a lot of things that I think are very native to where they come from. And I always particularly notice the things that are native to the United States from when Americans come and look at property. And I'm very respectful of that because obviously if someone's coming and putting their trust in me to help them look at properties, then I need to deliver the information that they don't know. That's why they're coming, right? So I want to be very sympathetic to these things, but I also want to clear up some misconceptions and I think some ideas that should be tweaked when you're going to invest in property overseas. And I'm going to go through a couple different things that numerous people have said and walk through each of those issues, okay? The first thing is debt. Now, I've gone on the record, I don't have debt, I don't want debt, I don't want to kiss up to the banks, I don't want to spend my life filling out their forms and begging for their approval. I had a home when I lived in the United States, I had a mortgage, very low interest rate, and it was a pain. As a business owner, as someone who was basically self-employed in their mind, I had different income every month, and they considered it less stable. It was hard enough to get a loan, and I've heard from friends of mine who were entrepreneurs that thereafter it became even more difficult, and in some cases next to impossible. I don't want to go through that in a country that I'm very familiar with, or that I used to be familiar with, let alone some new country, okay? So it slows the process down, it's frustrating, it's just not worth it. Oh, and by the way, that 3.625% that I had, you're not going to get that almost anywhere else, at least in a market that has anything really interesting going on, right? Maybe here in Malaysia, I think interest rates are pretty low. You're in the ringgit, which maybe there can be some currency benefits there. I happen to think not. But regardless, a lot of the markets we talk about, if they will give you a loan, it's not going to be 95% loan to value. It's going to be 50%, 60%, maybe 70% if you're lucky. And the rates are going to often be a lot higher than what you're used to if you're coming from the US or Canada or the UK or Australia. Okay? So you're going to pay a lot more. It's just not worth it, in my opinion, from a time and a money point of view. Now, one of the things that people talk about is using debt to reduce risk on a property. Okay? And so let's talk about that. One of the things that I hear from a lot of folks in the United States is, well, what if you get sued? Okay, obviously, the U.S. is a very litigious country. There's a radio show I've been listening to for 15 years, just recently reconnected with it for a little fun listening while walking, where the guy takes legal questions, and it's always, can I sue the person? Can I sue the doctor? Can I sue the guy who drove the car? Can I sue whatever? One of the things that I've found kind of interesting is I've had friends and the occasional family member who will call themselves libertarian. They'll come to visit me in one of the countries that I like to spend time in. Cambodia and Georgia are two that have come to mind. And we'll be walking in the street and they'll almost fall into a hole, like a big deep hole that someone built because they're fixing something in the sidewalk. They'll say, hey, how can that be allowed? Well, it's allowed because you don't have a nanny state that's enforcing all the rules. And so the same principle applies. If you fall into that guy's hole, whether it's the guy building the building built the hole or the government built the hole, you ain't suing anybody. Listen, you're an idiot. Why did you walk into the hole, they'd say. And so it's a big difference. It's a big delta between litigation in the United States and litigation in other countries. In a lot of the countries where I go, I have a network of attorneys. I've tried out numerous ones. I picked the best. It's a multi-year process generally. And you talk about litigation, no one's too worried. One of the countries where I've invested, I was recently talking to an attorney friend of mine about insurance. Because in a lot of parts of Eastern Europe where this was, the insurance companies generally don't insure more than like 30,000 euros, $30,000. And he said, most people here don't have insurance. It's just not an insurance culture. If the building burns down, they figure they'll rebuild it. It's the land that's worth something. And they're not really buying insurance in case someone slips and falls on a banana peel in their living room. It wouldn't really be the same kind of issue. Okay? And so the idea of having debt on a property so that someone has less to take, or that it's a less attractive litigation target, is something that is relatively US-centric, certainly Western-centric. I don't think you're going to see that in most of the markets that we talk about, the emerging and frontier markets. Another thing people have mentioned about why you want to have debt in a property is what happens if the market crashes? Well, my first response to that would be, why don't you buy in a market that is less susceptible to crashing? Now, obviously, real estate goes up and it goes down. I push back on this idea that a lot of people put out there, which is real estate always goes up. Now, what I can tell you is, if you look at the markets where I've been, you can go back 20 years, even in some of these countries, in times of skirmishes, brief wars, all kinds of weird, authoritarian governments, properties have been very steadily going up. And you see some of these markets and you think like, oh, it's overheated. Yet you go to China, for example, and how long have Westerners been in China saying, no, this market's going to pop eventually, and they don't really understand the culture. It keeps going up. Now, China's a unique beast, but you look at a lot of the countries we talk about, they have consistently gone up. I lived as a young adult in Arizona, did some work many years ago, sadly, in California. And those are markets that suffered greatly. I also did some stuff in Las Vegas. Back during the crash, we were doing stuff there, 2008, 2009, 2010. Those markets were very susceptible. Why? They weren't really built on. I mean, they have these big bubbles and they come crashing down. You look at a market in the Northeast United States, for example, perhaps a Boston that has a bit more of a track record. I don't think you saw as big of a dip there. Okay, so if I'm buying overseas, I think you can get good rental yields in a place like Dubai, but I think Dubai also has a lot of inventory. Dubai doesn't have as long of a track record, and if I'm going to buy in a place like Dubai, I'm probably going to imagine that I'm more susceptible to shocks. On the other hand, if I'm buying in capital cities, in established countries with domestic markets, and I'm buying in Tier A locations, I'm a lot less concerned. And so personally, I would say reverse the idea of expecting your property to crash. Now, of course, any property market can crash, any property market can go down. The other thing that I would say is, again, if we're following kind of the libertarian school of thought that I think a lot of our viewers look at, what, when I do a deal, I'm doing the deal. I'm not putting someone else on the hook. I don't want to deal with the banks. I'm also not going to say, what, my property went down in value. You deal with it. When I lived in Arizona in the late 2000s, early 2010s, and I saw people saying, I could pay the bill, but I'm walking away because why? Well, number one, those houses they walked away from and stuffed the bank with are now worth more than when they walked away. It went way down and it's now come back up and now it's once again overheated. So they would have eventually been made whole. The other thing is, what? Here's I've talked about I'm old school. Your word is your bond. I'm not putting someone else on the hook for my deal. I know many people here will disagree with me. They want to have everyone else be on the hook for their deals. I take responsibility for my deals. That's a personal preference. I don't push that on others. But I don't want to deal with the banks, nor do I need them to take on the risk of my deals. Government confiscation, another issue that has been discussed. Now, could your property be confiscated by the government? Whether it's just an outright taking of your property, some communist coup happens, or, hey, we're building a road here. Okay. Now, in most of the countries I've gone to where I've asked about what we'd call in the U.S. eminent domain, they say, most people here are actually pretty happy because the government overpays. They just pay them too much because they want to be seen as being favorable. But could the government just come and outright take your property? Sure, it can happen anywhere. But here's the rub. I've talked about how every country is a brand. The United States is basically Coca-Cola, right? And so people think, it's established, it's Coca-Cola. They would never do that. What do you mean they never do that? There's been cases in my lifetime that have gone like the Supreme Court, where it's like, hey, we took this guy's house to build a 7-Eleven. I don't think you should do that. So I don't really see the issues. Like the U.S. or wherever it is that you're from in the West is so much better than other countries. I have a lot less worry in a country like Malaysia having my property taken than I would, for example, in the United States. Now, Maybe they just don't like me in the U.S. Maybe it's just me. But Malaysia and a lot of these other countries, they really want to appear to be pro-business. They want to appear to be on the up and up and growing and going in the right direction. The countries that have the brands, I think, are the ones that don't care. Because if they take one guy's property in Belgium, are people going to start saying Belgium is so unfriendly for business? Okay, I'm already saying Belgium's unfriendly for business. But are people going to start avoiding Belgium as all the money from China and the Middle East and everywhere else that's been going to places like Belgium got to stop? No, because they have a brand. Yet, look at what happened in Turkey. When people started getting a little uncomfortable in Turkey, all the Arab investors that historically parked money there fled. That's why they created a citizenship program, to bring them back and reward them with citizenship, okay? And so I think that if you're a market like that, if you're an emerging market or a frontier market that doesn't have a brand, many of them, at least the ones where you can buy real estate. I mean, certainly some markets you just off limits, but the ones where you can buy real estate are already on the record as saying we want foreign investment. That's why they allow you to buy real estate. Many of them have changed their rules in recent years or recent decades to allow that. I don't think they're just going to suddenly backtrack and take your property. That said, one thing we talk about here is having a diversified property portfolio. I'm not saying go and put your entire net worth into property in Cambodia. I'm saying make it part of the portfolio. I guess like anything in a portfolio, if you have 20 different stocks, one of the companies could go bankrupt, right? That could certainly happen. One could just underperform as well. I really don't see the confiscation issue as a huge risk. In that, I see it as a risk everywhere. And I would say the same thing about property taxes. Property taxes in the markets that we look at are generally pretty low. I generally also look at markets with lower transfer taxes. So I'm looking at places where they don't charge a lot of money in tax. Again, these are generally emerging markets. The U.S. obviously has relatively low transfer taxes. There's no stamp duty, that kind of thing. Relatively high property taxes. And so, again, if a market is being pro-business, could they change in 20 years? Sure. Malaysia raised the stamp duty on properties over $1 million, bring it by 1%. Okay, a minor annoyance, but not really the end of the world. And so, again, if you're investing in places that are the right fit, that are the right culture, I wouldn't be too worried in general. The other issue that I hear a lot is more of the quote-unquote advanced tax talk about concepts like depreciation. Okay, people in Western countries, I know in the United States, people buy real estate. Oh, you can depreciate it, and there's a certain tax benefits to buying real estate. Here's the thing. Okay, if you're looking at countries that have simple tax codes where they've made taxes easy, that's the goal, right? But understand, if they make taxes easy, they also don't give you a bunch of extras. Okay, a lot of Western markets have all these bonuses and kickbacks and deductions and exemptions and this and that because their tax codes are really complicated and they have very high rates. And so it's like, okay, we'll charge this high rate. Basically, it's what they're saying is we want to charge a high rate, but then people we like, we'll just give them money back to incentivize things. If you go to economies that are a bit more laissez-faire or they're just more simple tax codes, it might be like 10%, period. For example, in Georgia, the country of Georgia, 5% flat income tax on rental property. And so someone recently came and said, oh, can I deduct my expenses from that? No, it's 5%. It's basically a turnover tax. So you charge $1,000 a month in rent, you pay $50 a month. Now, if you have a ton of deductions, then you can go and pay not the 5% reduced, landlord tax that they do to incentivize people becoming landlords, but you can pay the 20% income tax and then deduct stuff off of that. But it's a situation where, dude, it's 5%. What do you want us to do? It's not 55%. It's 5%. What do you want from us? And so, in a lot of these countries, the tax codes are so simple, you're not going to get stuff like depreciation. You're just going to buy it, you're going to hold it, and then when you sell it 2 years later, you just check a box. Oh, that was my residence for a brief period. Okay, you don't owe us any capital gains tax. And so, if that's the goal, if dramatically lower taxes on your income and capital gains are the goal, then you're not going to get some of the other benefits that you're used to. So it's still a good deal, but you're just trading what you're used to for a new set of much more simple, much more straightforward laws. Not in every case, but in a lot of the markets, those are the rules. So understanding, debt is different, litigation is different, tax codes are different. If you understand those things going in, you'll be ready for being able to invest in foreign markets that I think in many cases have a lot more potential. I think you can earn higher yields, higher appreciation, and I think you can have less risk of crash in markets that are growing, less risk of someone coming in and screwing with you. That, for me, is why we talk about investing in foreign real estate. How can Nomad Capitalist help you? 4 ways. Number 1, subscribe to our channel and click the notification bell to make sure you get our new video every day. Number 2, get a copy of Nomad Capitalist, the book. You'll learn a lot of my personal experiences over a dozen years of studying this stuff, as well as exactly some of the strategies that you can use to build your Nomad Capitalist plan. Number 3, if you're not sure where to start, but you want to come and learn from my team and I, you want to come and mingle with like-minded people, learn more about our live conference, Nomad Capitalist Live. It's coming up soon. And number 4, if you want some help right now because you've got a burning issue, you need something solved, you want to lower your taxes, get a second passport, or build the Nomad Capitalist lifestyle of your dreams, go to nomadcapitalist.com and click on Become a Client.